Thungela Resources says its export saleable production rose to 6.4 million metric tons in the period under review, up 4% on the year before. However, revenue came down by 12%, largely due to lower global demand and in turn lower product pricing. Outgoing CEO July Ndlovu explains.
And if you look at our results, there's no major stories to them. The single theme that runs through all of them is prices. Prices are down in Australia, they're down in South Africa, and that works through our results. Granted, we've had some challenges, particularly in Australia, where production is down year on year, but the sales are not an issue. We sold more or less what we sold the previous year.
Ndlovu believes that the coal industry is now at the bottom of the cycle, which should mean more potential for higher coal prices. Meanwhile, even though export volumes were lower than preferred due to lower demand, he noted an improvement in Transnet freight rail service, with it having achieved a run rate of 54.3 million tonnes this year compared to 51.9 million tonnes in 2024.
Pay half on half, Transnet is up 5%. Year on year, which is quite pleasing. They had their shutdown in July, and we expect after the annual shut that we should again see similar improvements to what we saw in the second half of last year. So we're quite pleased with the progress that Transnet is making in terms of fixing the rail, fixing the signaling, bringing in additional locomotive capacity, and all those together, working with the industry, are beginning to deliver some improvements.
But Thungela did express concerns around how geopolitical and trade tensions may impact on global demand and supply chains, particularly for the markets it serves in the East.
I think the big issue around the tariffs and the geopolitical dynamics is that it does affect particularly the key demand markets that we serve, which is China, Southeast Asia, and India. And these are the countries where tariffs have become an issue, and nobody actually knows what those tariffs are going to end being at this point in time. What that has done is create this unusual situation where these are industrial economies which are exporting a lot, and at the moment, what we're seeing is that uncertainty around industrial activity, and with it, almost lukewarm energy demand. And with that, we're not seeing the increased demand for seaborne coal that we expect. And that really is what has put a damper on prices. That level of uncertainty is going to remain until the tariffs are settled.
Officially remains the CEO of Thungela Resources until the end of December, after which CEO designate Moses Masondo will formally take over the reins at the coal miner. Nampumelo Siziba, SABC News, Johannesburg.